Gold technical analysis, August 19th. CommoditiesMansion.com. The gold market shot up again on Thursday as traders ran for the proverbial hills because of the renewed fears in European debt. As the stock market sold off in Europe, by the time the Americans woke up, many of them were down as at one point as much as 6 and 7%. The U.S. economic numbers that came out did absolutely nothing to waylay fears, as a U.S. Philly Fed number shows that manufacturing is falling in the United States, at least in that region, coming in at a negative 30.7 as opposed to the expected positive 4. This had investors looking for safe havens, and with the Swiss intervening against the franc and the Japanese intervening against the yen, it leaves very little place where we can go. Treasury yields did drop below 2% on the 10-year, which shows a flight to safety, and also the gold market, as you can see, was poured into fairly heavily. The market's far too extended to get involved with right now. As you can see, the 50-day moving average is way below this chart, and if you are looking to buy gold, you certainly need to wait for a pullback. You will get it. Moves like these don't last very long without some type of significant correction. If you are in the gold market, quite frankly, at this point, there's very little reason to get out, and one would suspect that maybe 1700 might be the line in the sand. If you're presently involved in gold, it's simply a matter of managing your trade at this point in time. Selling is not an option, even though we expect a pretty vicious pullback, as this market does give those, just simply because you're fighting the trend, and every selling action, as you can see, has been a buying opportunity as we move along.